A statement of cash flows act like a company's checkbook, measuring its ability to settle current liabilities by tracking the actual cash entering and leaving its bank accounts. Ultimately, cash flow demonstrates whether a company can pay its bills, survive, and grow. Under operating activities, common line items include, but are not limited to, depreciation and amortization. Depreciation applies to tangible physical assets such as buildings, machinery, and equipment whose accounting values decreases over time due to wear and tear. Conversely, amortization applies to intangible assets. A primary example is a patent whose acquisition cost is systematically spread out over its useful economic lifespan. Stock-based compensation. This represents a method of compensating employees, executives, and directors with equity or shares in the company rather than cash. Account receivables. Company expects to collect from customers in the future for goods sold or services rendered on credit. Inventory. Total stock of raw materials, work in progress goods, and finished products that a company holds. Account payable. The short-term financial obligations a company owes to suppliers and vendors for goods or services purchased on credit. Accrued expense. Liabilities for expenses that a company has incurred but has not yet paid or been invoiced for, such as salaries or interest. Under investing activities, common line items include, but are not limited to, capital expenditures, a fund a company uses to purchase, upgrade, and maintain physical assets such as buildings, land, property, or equipment. Investments, buying or selling financial instruments such as stocks, corporate bonds, a certificate of deposit CDs, or other investment vehicles. Under financing activities, common line items include, but are not limited to, debt, long-term or short-term financial obligation a company takes on or pays off, common stock, cash raised when a company issues or sells shares of its equity to public investors.